Skyler, that was a fun conversation. We just got done talking to Matt and Tad with Long Angle. They were a really cool community of basically high net worth individuals. They put together these SPVs that invest in private companies as well as uh, basically like funds that you could get into, like, you typically wouldn't be able to get access to unless you have a family office or you're an endowment and things like that. Yeah, I thought it really fun conversation. What do you think?
Yeah, I thought it was really interesting. I mean, they do due diligence not only investments but on the members that come in. They have 7,000 plus members in their community, which is fantastic, and obviously have a lot of information and data that they can glean from that, and really kind of help their members grow. And I thought the other interesting statistic was I think over 70% do not have a financial advisor. They invest directly. They're
Yeah, right.
for business owners, entrepreneurs, other types of folks that have that affinity just to go and make direct investments, which I thought was really cool.
Yeah, very clearly, very like hands-on people.
Yeah.
They have some cool surveys too. We'll have links to their website. You guys can check it out. But there's they had like satisfaction surveys for like personal trainer. I'm just looking at it right now, like private schooling for their kids and daycare, nannies, things like that, as well as, to your point, wealth managers, CPAs. Kind of some cool data there. Even a lot of their members use like Golden Visa. We had Mikhail Throth on pretty recently from Expat Money. I thought that was a kind of cool
Hmm.
connection there, where obviously he puts together like second passports and stuff for folks.
Yeah.
Um, I thought it was interesting. A lot of their members, a lot of these members are, folks with $10 million in assets, but a lot of them have second passports, which is something that's come up now in multiple conversations. Get that kind of escape key, if you will.
Yeah. The quality of life and freedom kind of people are looking to enjoy. Gives them options, right? That's pretty interesting. And just the amount of trends and sentiment data they probably have too, which is, as they mentioned, was pretty fascinating as they've grown from just, many years ago to 7,000 plus and members all across different areas of pretty much US primarily is what they focused on. But it's pretty fascinating to see their growth. And there's not many platforms or member communities that I know of that have that level of number of investors um, at this kind of and how they go about it. It's pretty unique,
Yeah,
fascinating.
definitely, definitely. And yeah, we started off the conversation kind of just diving into their group. So to kind of give some perspective about it. And then we asked a lot of just like fun questions about it. Just what are their members doing? Where are they finding value, not only in membership, but in life?
Hmm.
Because a lot of these folks, again, as it's, somebody maybe came from not a lot of money to now they have a lot of money, kind of what are some of those challenges that come along with that aspect? And, having a community is really important in a lot of cases.
Absolutely.
Cool. Well, without further ado, let's go to the episode.
Absolutely. Let's do it.
Thanks for tuning into the All Funds Network. My name is Mike Schroeder. Today I'm here with my co-host Skyler Steinke, and we are joined by Tad Fallows and Matt Shechtman. Tad is the managing director at Long Angle. Matt is the CEO and co-founder of Long Angle. Long Angle is a members-only community helping high net worth investors make smarter investment decisions through collective intelligence and access to curated private opportunities. So Matt and Tad, thank you guys so much for joining us today.
Thanks so much for having us here.
Let's kick it off. Maybe let's just start with first. Let me take this one to Matt. What is Long Angle? And then kind of curious just to learn about your story and how you guys came up with this.
Yeah, so background for starting this is about 5 years ago. And really the reason kind of from the personal journey that I was going through that led to wanting to start this is that I bootstrapped a software company shortly out of college with Suram, who Matt mentioned. And we grew that over the course of about 10 years to about 75 employees, then sold it to a strategic acquirer. So from a kind of personal finance perspective, on one day, went from having a very low net worth to having a lot of net worth, and had a bunch of new questions related to whether that was alternative assets, estate planning, raising kids with money, thinking about, different options for travel or for personal health, things like that. And, a lot of good, high class problems or new questions to be, figuring out. But a lot of the information for those questions was coming from Goldman Sachs or Credit Suisse. and was really more interested in being able to get advice on those questions, again, whether they are financial or non-financial, from other people who are in the same situation, who had no vested interest in trying to sell me something, but really just peer-to-peer advice. So that was the background for starting this. We started 5 years ago, as I said, with maybe a dozen friends in the same situation, kind of a glorified Slack channel. Over the last 5 years, we've grown to almost 7,000 members now, really almost all through just word of mouth referrals from one member to another, with our typical membership being people probably in their 30s or 40s or early 50s, kind of first generation wealth creators, whether that is entrepreneurs, executives, people who've had success in a wide variety of industries. And typically in that kind of what banks would call very high net worth or ultra high net worth category of, $5 to a couple $100 million. That community is looking for a few different things. One of them, as we're going to get into much more here, is this access to private market investments, where a lot of people might say, hey, look, I can manage my portfolio just fine at 60-40 myself. I don't need to pay somebody 75 bips to go into the S&P. But if I do want, let's say, 20% of my portfolio into private market investments, that is something where, both getting access, doing the underwriting, hitting the minimums, all those sorts of things, even if you've got, let's say, $20 million, if there's a $10 million minimum on one fund, you're not going to want to put half your net worth into a single vintage of a single private equity fund and knowing which ones to go with, et cetera. So that's one of the things. And then, which I think we're going to spend more of the time talking about here today, but some of the other kinds of stuff we do is we have a private online community that's sort of like a private version of Facebook or Reddit, where people discuss the whole breadth of things, from talking about investments, talking about my cousin's asking for money, talking about, hey, how do you talk with your kids about money? I've never been to Tokyo. I'm looking for a new CPA, any kind of question there, with really the only rules being confidentiality and non-solicitation. And this is a totally free community, so we don't charge for membership. We do interview and vet all of the members. We've got about 50 members who act as volunteer selection team to do those interviews and introduce people to the community. We've got that private online community, and then we do a number of also kind of events and peer networking groups or peer advisory groups. So we'll have groups totally optional, but if you want to be a group of 8 other members who meet once a month on a recurring basis to kind of get to know each other better and act like a board of directors. And then we do a lot of meetups, either a big annual event or local, here in Dallas, in New York, in Seattle, wherever it is, kind of more frequent, smaller kinds of meetups. So we do a number of those different things, and happy to talk about more, but I know we've only got a finite amount of time on this podcast here, and probably the thing that people are most interested in hearing about was what we do on this alternative asset side. But I would just say, if any of this kind of resonates with any of your listeners, whether that is particularly the access to the alternative assets, or whether it's other aspects of this community, they should feel free to check out our website at longangle.com and, learn more there and see if it seems like a fit for them.
Definitely. We'll include links down below with, now in terms of the, a couple aspects we want to start with. So I guess maybe just to summarize this, you have this group, this is a great place for people, that have some level of net worth that could come in, ask each other questions, get some personalized advice. And then there's also the aspect where you guys are creating these different investment vehicles for these folks to invest in alternative assets. Is that correct?
Yeah, that's right. And I'll let Matt talk the investment side. But basically that was, yes, the idea is it's a place where people can ask each other, really, especially the unbiased advice. If I know that if I'm asking you, hey, Matt, what are you doing for a tax advisor, a financial advisor or something, it's not because he's trying to sell it to me. It's just his, first person real world experience there. Mm-hmm. And that was actually one of the things that then led into this investments, which I'll let Matt talk more about. But there were certain sets of things where people said, hey, this advice is great, but I kind of have an unmet need in this area. And so this is really more member-led of people saying, hey, I'm kind of interested in doing more in this private market space here. And that's kind of what got us kickstarted. So maybe, Matt, I'll let you to describe that part of it in a bit more detail.
Yeah, please.
Sure, happy to. I think what we saw at the outset, give or take, we started getting into alternative assets about 3 years ago, was a broad white space between your retail investor and your multifamily office, where you're getting very good access. On that spectrum, let's call it below 25 million in net worth, we were just seeing a very wide and divergent range of access and opportunities. either coming through a wealth advisor, and honestly, most of that kind of just pulling down from a drop down menu from a wirehouse case, iCapital kind of thing, but not really knowing what type of exposure they're giving to their clients, or clients going direct through crowdsourced platforms or through friends and family deals or investor clubs and things like that. And on both of those cases, for your sub ultra high net worth investor, we felt like it was just very suboptimal in terms of the access, allocation, and diligence. And we felt like there was a big opportunity to do it significantly better. And so we take a more of a family office approach to our diligence and say, this is our target, this is our strategy, this is where we think there's significant opportunity, either because we have better access, we have better means for diligence, or simply due to the size of our capital commitments, it allows us to invest along institutional investors. And so if we can cut out the fraud piece, the very retail deal-oriented piece, and we can just go institutional access, but we can get our members access for ticket size closer to 100,000 instead of $10 million, then we can significantly up our game. And then the sort of add-on piece that has created a lot of network effect, frankly, over the past couple of years that we didn't really anticipate, but that has come in handy, is that now that we have 7,000 members who are getting free access to our overall community, it's pretty hard to find an asset class, a manager, a specific deal, anything where we don't have members who are in the industry, who bought or sold businesses from the private equity manager that we're working with, who went to college with, worked with, partnered with a variety of the different sponsors or deal types. And we go to that member base and we have them help us diligence our assumptions, diligence the managers and the sponsors, and then also creates a lot of access opportunities as well. So to date, on average, we write about $11 million per commitment and do give or take one investment per month in terms of a very deeply diligenced theme, rather than here's your drop-down menu of 20 things that you may or may not want to choose from. And then our members can choose to allocate alongside us or not. And the principals and or our employees invest in everything that we bring out.
Yeah, that's really cool, Matt. One quick question regarding that. So by the way, 7,000 members, that's a huge accomplishment for both of you guys. So that's amazing. How do you maintain the quality of conversation and investment at scale, given there's so many people, right? There's a lot of due diligence. You say you do one opportunity a month. What does that look like for you guys?
So on the conversation side, we found there's a bit of a trade-off. There's some real advantages to scale, where especially it's the more esoteric the question, kind of the more valuable it is. So somebody might say, hey, my wife is Swedish, and so she has some property there, but we live in the US and we're trying to find a good tax lawyer who understands these US-Swedish tax implications. You need thousands of people to actually be able to get 2 or 3 good recommendations on that. And so there's some real advantages there. But the flip side is, I think there can be the risk that we have seen is that you have people tempted to see this as a solicitation angle. And so the thing that we lean really hard into is thou shalt not solicit here. So if anybody has, ever puts their hand up and say, oh, well, I'm a US Swedish tax lawyer, they're just out of the community. And granted, you're going to miss, 1 or 2 good pieces of advice there. But the flip side is you maintain that trust of, okay, the advice I'm getting is not going to put $1 in the pocket of the person giving that advice. They're not going to recommend themselves, their brother. They're not looking for clients. They're not looking for investors. They're just, peer-to-peer advice. And we have found that by being really diligent on that, the 1% of people who are looking to try and, get a client or get an investor, if we remove them, then the 90% of people who are really just looking for the collaboration can thrive. And so it actually has not been that hard to just be proactive on the moderation. I will also say, and I want to give credit, I mentioned we have several dozen members who act as a new member kind of interview and onboarding team. So every time somebody applies, we schedule them for a half-hour call with a current member who will just spend the time talking about, okay, what's your journey? What are you looking for? Let me explain to you how the community works. And that I'd say is the other key to maintaining the quality of the group discussion.
Yeah, on the investment side specifically, I think all the things that Tad mentioned are instrumental towards keeping that process in check. But I have found overall, people just like to see the overall discussion. And so if I was to use a specific example, we brought something out last week. I can't name the specific company, but a late stage private company, pre IPO. Everyone's heard of the name, hard to access. Our overall goal isn't necessarily to say, hey, jump on the AI train, you should do this, it's going to 4X. It's to say, we know you all want access. Access is hard to get. We're going to get it in the cleanest mechanism that we possibly can without 3 layers of SPVs, a bunch of markups, and a bunch of additional fees. So here is the vehicle we're going to do it to invest alongside the lead in this round. But we're not really opining in terms of whether or not we think that it's a good multiple and playing 30 times sales is the right approach. But we have 80 people who are discussing this within our platform to be able to give the back and forth on, I think that this is a little bit rich. This is my viewpoint. And we have a specific employee of that company and of a competitor in this channel kind of going back and forth and discussing the pros and cons. And so from that perspective, I think it really helps our members be like, okay, what is the value being provided? And then how can I distill that information as efficiently as possible when I know the signal to noise is really strong because everybody has a name attached to them, everybody's been vetted and interviewed, and there's no solicitation going on in the platform. And so that has worked out pretty well for us on the investment side.
Yeah. And that's really cool. So I like that example. So you guys in this example, you guys had a private company hard to get access to. You guys set up an SPV, so these different folks had the opportunity if they'd like to, participate. And then you guys also structure these SPVs so that they could invest in like large, so private companies like to your previous example, and then also like large funds, maybe a private equity, private credit fund like that. Is that correct?
Yeah, that's actually the bulk of what we do is into managers, and we'll do deep diligence into your HIGs, Golubs, KKRs of the world, et cetera, not just large cap, but in the middle market and across private strategies. But to that specific example that I just brought up, we've just seen a lot of demand in the past year or so. And associated with that demand is some frankly like fairly shady vehicles being set up with like unclear fee structures, unclear valuations, embedded ROFRs in them, multiple layers of access, and frankly, like who knows where this paper is coming from and like what you're actually buying. And so to us, we said, that's something that I think that we can solve, right? And so we have the ability to set up these vehicles and get much closer to direct cap table access. But to your point, for the most part, we are going into fund managers across private markets with the core value proposition being, especially for our membership base, where the vast majority don't use wealth managers or wealth managers of the caliber that should be getting you access to private investments. And they can just choose a la carte. You know what I'm really lacking because I have 95% tech concentration is real assets or private equity or something highly uncorrelated like music royalties or litigation finance, but I don't know where else to go and get it because I'm not wealth managed. And so I'm going to pay long angle just to get access to this one thematic strategy. And then they might not do anything for the next year until they see something else that meets their asset allocation targets.
Yeah.
How about the, if you could just cover quickly, kind of the due diligence aspect. I know previous conversation with Tad, I think you mentioned you guys have a good handful of people working on the due diligence.
Yeah, so we have a full-time team of 8 on the investment side, of roughly split between front and back of house. And so our diligence process looks very, very similar to that of a typical institution, an endowment, pension, family office, where we will get initial introductions. And so long as it meets our overall thematic targets and passes the smell test, then we will run it through our diligence process. And so that has a professional diligence team on our side. We just brought on our new CIO. He was running the growth equity team over at JP Morgan. We have another VP of investments who's running things down for us, myself, and then the other team members mentioned. And then the thing that's roughly unique, I'd say even to institutional investors, is what I mentioned before. We have those 7,000 members to rely on. And we have a few different ways of approaching this. And so it depends a little bit on the manager. If we're doing an investment into a multi-billion-dollar vehicle through KKR, I don't really need opinions on the people that worked with or invested with KKR before. They have 40,000 employees. Everybody knows this household name. They're publicly registered, and you can read everything that you'd ever want to read about KKR. But it's really helpful for underlying strategies. Let's call it a lower middle market North America's strategy. Okay, well, who's in the game? Where are the people that we can source that have been buying and selling in this space, that are maybe investment bankers in the space who have been working in the arena, so to speak, in that area, and then could help us underwrite the assumptions on a more macro level. So it just depends a little bit on what we're looking for. And we will make calls out to our investor base. So I will send out a YAM, for instance, to our most engaged investors. Let's take the top 500 and say, this is what we're looking at. These are our needs. Do you have experience, or do you know somebody who has direct experience in X, Y, and Z? And that could be the specific sponsor, it could be the specific theme, or it could be some sort of macro issue that we want to look at. So for instance, earlier this year, we were looking at a middle market industrial roll-up strategy. One of the key things that we were looking for is potential tariff impacts. And so we went to our investor base and we said, hey, who has their boots on the ground and can really help us with this? And that's in parallel to us looking for people with industrial and manufacturing expertise. So we'll look for different things at the same time. And then also when we're bringing new members in, one of the beautiful aspects of interviewing and vetting every single member that we have is that we have an extensive amount of data on their backgrounds. So throw a name out there. They're public now, but let's say that we were doing a private investment in Snowflake. Well, we know that we have 8 employees at Snowflake. What kind of information can we get out of them that, maybe we wouldn't be able to get otherwise, or a variety of other factors? And we have the actual ability to go direct to these 6 or 7 people that have deep experience in what we're looking at, that helps us run things down further. And then across the landscape, from investing alongside the prior mentioned pensions, endowments, family offices, et cetera, we have a pretty robust network of other institutional allocators. Hey, who is invested with this sponsor? Who has done the diligence here? Have you guys invested? Are you looking to invest more? Would you invest again? And that really helps as well.
Yeah. Yeah, that's pretty interesting. Having all that data across both on the member side and the investment side. I guess going to more on the members side, obviously you'll probably have some interesting things you could probably share as far as trends, but are these members coming in? Have they invested in the private markets before and alternatives before, or is this brand new for them? And what maybe challenges or unique things you're saying relative to that thought process?
Yeah, I'm happy to share a little bit of our kind of the general demographics and their experience. I would say the general demographics, as I said, they tend to be first generation wealth creators. So it's not somebody who grew up in a family with a family office structure and kind of their dad was doing private equity and they learned at his knee. They are figuring this out for the first time. As Matt mentioned, the significant majority of them are self-manage their portfolios. Probably 70% of people don't have a wealth manager. And by nature of doing that, you're going to have some of them are pure bogleheads and just say, hey, the only thing one can ever do is minimize fees and it's all in the S&P and I'm done. And there's nothing wrong with that. I think that's a, great, you'll do just fine with that philosophy. But there's also a lot who just find, especially entrepreneurs who built their own business. It's pretty hard to be an entrepreneur and not find business and financials interesting. So a lot of people get a significant expertise there and are kind of interested in saying, hey, I worked very hard for this money. I want to accomplish more with this money, and they read some books and they go deeper in it. So I think there's a lot of interest. I would say in terms of their particular expertise in private markets, my sense is it's a bit of a bimodal distribution. I'm not sure if that's the right word, but there's a lot of people who do not have a background in doing it and are interested, and they kind of want our help in learning about it. And I think that's one of the things people like is we play with an open hand. So we say, hey, you can read all the diligence materials. You can come to every diligence call and never pull the trigger on investment. And we are 100% fine with that. There's no pressure to do it. You can just use this as a learning experience. And then, as people get more comfortable, they say, oh, I actually like that one. And actually, something we'll often see is that when people see an investment in their own industry, that tends to then give them more confidence in our overall diligence process, because they say, hey, I don't know about private equity, but I do know about litigation finance and I work in it. And I see the player that you chose in litigation finance, and that gives me more confidence in the selection process. So next time you're doing some other asset class that I don't have as much expertise on, I've got more confidence there. I would say there's then the other mode is a small number of people who I'd say are deeply expert in private market investments, and maybe they made their money starting a hedge fund or starting a private equity fund, and they really are veterans. And so I think for them, they will be pretty strategic. They won't invest in every opportunity that we have, but maybe once a quarter they'll have one that they really like, and then they will go very deep in that one and put a lot of chips on the table because they said, hey, I've always wanted access to X hedge fund, but that's a hard one to get. And now I see there's access. Or, hey, I've got nothing that has oil and gas exposure, but I love the ROE on this. And I, like the correlations or the different correlations that it has. So I'm going to go deep here. So I'd say it's a little bit of both. There's a lot more people in that category of first timers, and they're coming up the learning curve with us, but some deep experts. And they tend to be very valuable in what Matt's talking about of we're not going to get 7,000 people's advice on any given investment. But you have those people, even some members actually who run single family offices. So they have a lot more assets than Matt is typically talking about here. They may be managing hundreds of millions, but even they say, okay, there are certain ones where, I don't have that access to, or I haven't seen that one before. And yeah, they'll be very valuable in that underwriting process.
Yeah, that's interesting. You both mentioned a couple of things. One, the statistic about most of the members are coming in direct without a wealth manager, or having a financial advisor, if you will. Why do you see that as is it an ongoing trend you're saying going forward? What are your thoughts on that? Either Tad or Matt.
Yeah, I've got a hypothesis there, then Matt, I'd be interested in your take. I think it's probably a few things. One is the community in general skews on the younger side. And so I think in general, somebody who's in their 30s has kind of always grown up with this self-service, like they never went to a travel agent. They always went to Expedia or Kayak to book their own flights. And they're used to, maybe when they had 100,000 to play with, they would just go to Vanguard or Schwab and type it in themselves. So I think somewhat just digitally native, used to self-service, used to researching things themselves. I think some of it is, as I mentioned, a lot of people, being something like an entrepreneur or an executive, this comfort with big numbers and financial terms and what is cash flow, what's ROE, what's ROI, et cetera, that they don't feel like there's that much mystery here, that they're comfortable managing the money. And then I would say also, we tend to have a lot of people with maybe a technology background. And if you kind of come in with an engineer's mindset, you're going to look at 75 basis points and not say, well, that's less than 1%. You're going to say, well, 75 basis points times $10 million times 30 years is a huge amount of money. And so it's worth my time to, open the book and roll up my sleeves and really do it myself. So it's probably, some combination of those three things in my experience.
Yeah, I think that's right. I'd be hard pressed to take our sample and then try to extrapolate that out to trends across industries. I do think that there are some, we just ran a professional services survey across our membership base and published that out. And one of the things that we saw is the people that do work with advisors are fairly dissatisfied with them. And so that's one piece of it that you could apply generally, do you
have any takeaways from that?
Yeah, I think it's relatively high fees. Tad was mentioning it's a really fragmented industry where not everything means the same. You could have fiduciary, non-fiduciary. You could have somebody who's just helping with your ultimate estate planning, or you could have somebody who's managing all your investments. Like actually making an apples to apples comparison to Edward Jones or the guy around the corner or Crescent or a multifamily office, like it's just impossible to equate all of those things. So you really need to have a user who knows exactly what they're looking for and has that person or firm matched to what their needs are, which is something that the industry hasn't done a particularly good job of, I don't think. And then you have the last 15-ish years of up and to the right. And so if there's any time period to look back on and be like, why would I have ever needed somebody to manage my investments? Like you should look at the S&P over the last decade, right? So a lot of what we do we're not here to knock the wealth management space. I think there's a lot of areas that can do significantly better. And, we think that there's definitely value for wealth management, but we are trying to prepare our investor and member base for like when things aren't so great, whether that's through us or whether that's through general education or through wealth management. But I think the fact is a lot of people have looked back and been like, hey, why would I ever pay somebody to underperform the S&P, right? And so,
Yeah.
yeah,
Right. That's supposed to be a win in my book. Kind of hard to swallow that.
yeah,
I also saw, so on your note of the professional services, I was going through your website earlier. I saw, so the asset allocation for high net worth individuals that you guys work with, 47% public equity, 15% private companies, 17% real estate, 8% alternatives, 8% cash and bonds, and 5% in other financial products and lending. I thought that was just interesting. Just, I mean, just kind of gives somebody like a good base. I don't have any good like questions lined up for this, but do you guys have any like good like takeaways from your survey there?
I mean, I would say one thing that at least I found surprising, and maybe you would as well, is that people simultaneously do quite little in the bond space or in the lending space, but at the same time, they're very light on leverage, where you might expect that, so you say in terms of a quote 60-40 typical allocation, that 40%, as you said, in practice, we see people sub 10% in their bond allocation. I think a lot of that is people just saying, hey, if I'm 40 years old, I've got, let's say, another 40 or 50 years to go. I am quite confident that an equity instrument is going to outperform a debt instrument over a 40-year horizon. And I don't care that much, how much it moves in the next 5 years. I care in the longer term. I think that's probably part of it. But on the leverage side, I think it's kind of the flip side of the leverage of I can afford to take more volatility if I'm not leveraged significantly. So if you're somebody who is borrowing a lot to invest, then a bad market could make you go bust. But I'd say our average member, if they have $100 of net worth, they only have $10 of debt, including a mortgage. So I think only about half of our members carry a mortgage at all. And I think that is, pretty unusual and not necessarily what you'd expect. But I think in some ways they're two sides of the same coin. So I'm going to keep down the leverage. And then what I do have, I'm going to put all on the equity side of the stack and not on the debt side of the stack.
Then I also, coming back to your survey too, I thought this is just kind of cool to see. I'll see if we could just like put up a chart of this. I'll share my screen from now. For this part, I thought this was really cool. You guys had the personal trainer, had 9, these are satisfaction ratings out of 10. So personal trainers is 9.3. Golden visas, I thought this is a really interesting one as well, 8.8. And then to your points earlier about like wealth management, these are some of maybe the lower scores that were given. Wealth management, CPA, and tax 7.1 out of 10, which is cool. I thought this was really cool. The personal trainer 9.3. So, and also I would like to get into the golden visa a little bit, maybe. But personal trainer. So is this something that you guys find like a lot of your clients have, and seems like they're pretty satisfied with this? Yeah.
Yeah, I think what we see a lot, our target, or not necessarily target, but where our demo sits is about 80% sit in the 10 to $15 million range, which is kind of an interesting psychological breakpoint where people are starting to index more towards quality of life versus accumulation of assets. It's not that accumulation is stopping or then it's not a focal point, but they find a lot more satisfaction out of improving their quality of life, whether that's health and wellness or family services or those little additional things where they can buy back their time. That tends to be where people get the most direct satisfaction from. And then some of those others, like I mentioned, the fragmentation in the wealth services space, also CPAs, where you tend to have more friction in moving from services, like actually moving your assets from one wealth manager to another has a lot of friction tied to it, potential tax consequences, et cetera. So people feel a little bit more stuck. And then CPAs, I think some of that maybe
kind of the same
fit.
thing.
Yeah,
A little bit sticky.
That's right, as well as the fit between what the client and the service provider are actually where they're coming together. Some clients expect every CPA to be providing forward-looking tax strategy. And there are so many CPAs who'd be like, I don't know why you would think that I would do this. I take data inputs and make it into an output, and that output is called a 1040.
Right.
Like, I don't know why you ever thought that I was going to give you tax advice. But there are plenty of CPAs who do, or firms that specialize in those types of things. And there's just a disconnect in terms of what people expectations are. And so you see a lot of that in terms of where the satisfaction scores come from.
Yeah, it's something Skyler and I have talked about pretty recently. We were saying the lean on the aggressive side. Yeah, Skyler?
Well, I think when you look at entrepreneurs and business owners by nature, their taxes are a little bit different, I would say. And they're used to kind of looking through the process versus just, hey, input, output. They want more than that, at least from my perspective. And Mike and I were talking about that recently. So yeah, I definitely would. That makes sense a lot as far as that goes. I'm curious too, just the level of conversation. What questions that are probably being asked in your guys' community that maybe are a little bit different than others? This is very interesting, the statistics here, like who's involved, the membership, what people are doing, and just kind of what you guys mentioned as people build businesses and other things in their life, as they get down later on, they want a quality of life, as you mentioned. They're paying attention to their health. They're investing in different areas that are maybe not the norm, the standard. And obviously then you have the other top-down headwinds of, hey, the 60-40 model doesn't work anymore. It's broken. All these other aspects that are trends that are pushing the narrative a little bit different in the marketplace. I'm curious if that's kind of what you're seeing as an ongoing theme for many of the community members.
Well, I'll say one thing that's interesting is the single most discussed question is, how do I have wealth be an asset and not a liability for my children? So it's actually not a financial one. It's this idea of, hey, I have achieved a certain level of success in life, a lot more than I grew up with. But a core part of that is I had to struggle. I had to work hard. I had to be scrappy, et cetera. And they say, well, I want to give the kids the benefits of being able to provide more, but I don't want to actually end up neutering their ability to do it by taking away that thing that was core to my identity. And I wouldn't say that there is one, single right answer to that, but that's probably a key thing that, not every member, they don't all have kids, but call it 80% of them have kids and are trying to figure out the right way to balance that.
Yeah, definitely legacy. How am I going to pass it on? I don't give my kids too much to where they don't have to do anything, but just enough so they can do whatever they want and build on what they want to do in life, right?
I saw on your survey too, one of the most underutilized is estate planning. You guys have any insights into that?
No, that one was surprising. I think there were some nuances in the survey that we can probably create more lines of delineation next year, just to be exactly clear about what that means. I'm sure there are many survey takers who have a will, but they marked that they don't use, an estate planning attorney. So like just figuring out exactly what those gradations mean. But even so, it is interesting, even in the ultra high net worth category, what was it? Only 47% Tad use an estate planner that are clearly going to be over the estate exemption. It's interesting.
I mean, my personal hypothesis is a lot of this is you need some sort of catalyst. Like, this is never a fun activity for anybody. It's not a fun thing to be thinking about is, oh, when I die, what's going to happen? Everybody gets jazzed about that. And so I think it's, for all the people I know, and if I speak about personally, there needs to be some catalyst event of like, oh, I've got this one asset that right now I can get a mark that says it's only worth 100,000, but I know it's really worth 10 million. So I'm going to kind of hurry and put something in place before December 31st this year. Or maybe I think that some estate tax thing is going to expire next year. Now those always get delayed, but there are always these, phantom concerns of the estate tax is going to crater. And so you got to get it all pushed out today. But I think when you don't have those catalysts, then it's sort of, well, I can always do it next year. I'm still young. I'm still healthy. I don't know. I don't want to think about it.
100%. Yeah. Like, we've seen it. Like, there's a death in the family, they didn't do it right. How could we change that? Golden visas too. Is it something that's like pretty common among your members? I assume somebody with more than maybe 10, we had somebody on recently to talk about, like second passports. And I thought the golden visa concept was kind of cool that you guys had here.
Yeah, it's funny how I would not have guessed. We do a number of these partnerships where there's a certain set of vendors or service providers that are very relevant to our community. It's not going to be Coca-Cola or Procter & Gamble where they're going to say 7,000 people is nothing, but these more niche-y things like Golden Visa where they say, oh, actually, you guys are a significant portion of our target customer base, so we will give you, discounts for your members or, extra services or access for your members if you can help make them aware. And so in those cases, we try and evaluate providers and say, hey, we think this is a high-quality provider. So we thought, we weren't even sure if it was worth doing this, but we decided to go through and look at a bunch of Golden Visa providers, and we picked out one that, we thought had the best services. And we've been shocked how much uptake there is on it. And I think, one guy said to me, hey, does everybody else here know something I don't know? Like, why is everybody fleeing the country? I think a lot of it is really just an insurance policy kind of thing of some of these people are actually moving to Portugal because, maybe they want to give their kids an international experience. Maybe they want a slower pace of life, a lower cost of living, et cetera. But I think a lot of them are just saying, hey, should things ever get to the situation where I need a second passport, by then it is far too late to apply for a second passport. You need to have done it 5 years ago. So if I have the money, I've got the time,
shit hits the fan insurance.
Yeah. And I think there's a little bit of cocktail party too. It's a fun thing to talk about, the cocktail party of, here's how I got my angle of an Italian passport or, Spanish passport or whatnot. So I suspect that that's a bigger percentage than people will.
Yeah, well, too. I mean, you obviously give your kids or the opportunity for a future, wherever they want to go from that point of view. To live in a different location.
Yeah,
all those things that you mentioned. Quality of life is definitely a big important part of that.
What are some of the biggest takeaways that you guys have seen from like your members that Tad, maybe a question for you, like somebody that joins the community, what are some of like the biggest takeaways, like some of the maybe the lowest hanging fruit of that you see like a lot of that resonate with a lot of people within the membership?
Yeah, I mean, one thing we're actually working on right now is trying to put together a checklist for people of saying, hey, if you're new to wealth, here's basically the 5 basic things that you should put in place. Yeah, there's 100 more that you could do, but there's certain table stakes that are going to make sense for almost everybody. I think one of those, as we just discussed, is estate planning, that it's always better to do it earlier. You need at least a plan for your kids. You need at least your living revocable trust, but also some advanced things. So that's one. I'd say umbrella insurance, and in general insurance, I think people are often, hey, I'm still with my State Farm guy. And you realize, hey, you're dramatically underinsured. You're not getting the quality of service you ought to. You don't have umbrella insurance. You don't have D&O insurance. So I think a lot of it is, hey, you need to pay a little bit more, but you will get a vastly better experience. And hopefully you will never have to use it. But if you do, you're going to be really glad that you got your 10 million of umbrella and you're working with Chubb, who will actually pay their claims rather than fighting you about it.
That's true.
And then I think, there's also some things around, often people need to upgrade their CPAs, where probably 80+% of people have somebody else filing their taxes. They're not using TurboTax anymore just because they've got too many K1s or too many state filings or something. But often people are with CPAs who don't really specialize in kind of that nature of client. As Matt was talking about, the CPA will file it accurately, but they may be paying a lot more than they really had to if they, not that we would ever advocate particularly aggressive tax stance, but I think there's a number of things that are not all, you can think of things like, 1031 exchanges or, certain things. Let's say you have a big stock position that you're going to buy. I think another example, or not that you're going to buy, that you've been working, let's say, at NVIDIA for the last 10 or 20 years. And now all of a sudden you've got $10 million of NVIDIA stock with basically zero cost basis, that you could either just sell that and pay $2 or $3 million of taxes on it and move you on your way. Or there's certain options you could do. You could do things like direct indexing, or you could do an exchange fund where you actually get that diversity, but without realizing that big capital gain. So I think that that's probably another big example that there's some basic table stakes on tax management without getting aggressive that you can do.
Makes sense. This is backstreet for both of you guys. What's the biggest lessons you guys have learned, particularly with building this community? I mean, it's going to 7,000 members. That's a lot of members. I'm just curious, along the way, what are some kind of insights or revelations you guys have kind of gleaned over the course of time in building this platform, if you will?
Oh man, there's probably a lot there that I won't even think about today, tomorrow, or next week. I think it's really interesting to see that there are quite literally a million ways to make $1 million, just to be trite about it. And that leads to just some really interesting personal insights about how people think about their entrepreneurial, wealth building kind of success type journey, but that the common denominator, regardless of the money side, is that everybody has the same kind of issues and concerns and fears and things that keep them up at night that they're trying to solve for, except it can be somewhat isolating when you get to a certain level of wealth, especially for first generation wealth providers. It's one thing when you're second or third generation, you're like, well, everybody that I went to school with at Phillips Exeter or Andover or whatever is in the same situation. So I just call one of my, 20 or 30 old classmates and we discuss what happens when I sell $10 million of NVIDIA. But when you come from, a background of middle class or lower or something else, and your entire support network is kind of clueless to these things that you have because you've either purposely kept it from them or you feel uncomfortable about it or any of those things, you can find yourself very isolated with respect to a lot of the questions and issues that not only does your network not necessarily equipped to answer, but that you're afraid to ask about it. And so people can really kind of come in and they're looking for community more than anything. But then there's also just a boatload of questions that they don't even know to ask. And so you find a lot, especially with concentrated wealth building, of people that have built this trench that's an inch wide and a mile deep, and they can turn around and they can build you, an AI module or an app or a real estate development or whatever it is in the blink of an eye. But then you ask them about, tax implications, and they're like, oh, well, I wouldn't even know where to start. And so that's one of the beautiful things about the community is, well, when you have enough, 1 inch wide and mile deep, then you get pretty wide and pretty deep. And so you can get a lot of benefit from your peers in that respect.
Yeah, definitely.
I'd agree with everything Matt said. The only thing I would add on to that is maybe another version of these challenges is that fundamentally having significantly more money doesn't really solve your problems. It'll solve a couple basic ones. You're not worried about paying the rent, but if you, for example, have a good or bad relationship with your family, you are not going to have a better relationship with your family just because you have more money. Or if you're not in good personal health, you are not going to suddenly be in good personal health because you have more money. And it sounds sort of simplistic to say, but I'd say the same, whatever the questions are people are asking, their fundamental concerns are not really any different than they were 5 or 10 years ago before these people had money. Hey, how do I raise my kids properly? That's the exact same question that they would be asking if they had $500,000 or $10 million. They're still just saying, hey, how do I be the best parent for my kids? Or they're thinking about, how do I support the causes I care about, whether that is volunteering personally or donating money. It's still kind of the same fundamental questions there. So I don't know if that is, inspiring or depressing to people that doesn't change, but I would say it is a tool, but not a kind of identity change for people.
Yeah, for sure. What's the biggest unlock still ahead for Long Angle? Is it more members, deeper deal flow, global expansion? Anything on the horizon you guys want to share?
Yeah, I think one of the things that we're seeing is the connectivity piece. I think there are certain asymptotes that you hit where more doesn't really do a whole lot for you. Like we've got a lot of deal flow, and I don't know if you just look at the credit landscape. It's like, well, adding on top of Golub and Ares and, Monroe, et cetera. Do we need another one? Not really, right? That's not really it so much. But a lot of the network effect of the community still has a long way to go. We have, 400 or 500 members in San Francisco and Seattle and New York, but I don't know, there's 4 in Des Moines, right? Could that community, use another 20 or 30 to really help their internal network? Yeah, for sure. And then as Tad mentioned, as we get from 7,000 to 10,000 to 15,000, our ability to unlock a lot of the benefits that we can get with the size of the community, so we can go and negotiate with Delta and NetJets and the Four Seasons and things like that. The size and scale really helps with those types of things. But really, I think we're very North America focused right now, and there's a whole world out there for sure that can benefit from the additional connectivity of the membership base, because we see it all the time where our members are like, wow, without this I wouldn't have formed this new business endeavor with this other member I met. Without this, when I was traveling to Switzerland, I would have never met so and so who runs a hotel there, and we got to meet and do these interesting experiences and things like that. There's a whole world of that.
Yeah. Is there a lot of I know you guys do some like in-person meetings. I could see that being a really good way to, for somebody to build their network. Like I'm here in Chicago. I'm sure there's a lot of, members as an example that are in, big places like Chicago or New York. How are the in-person meetings been from that? And yeah, I'm sure, they generate a lot of like friendships, things like that.
Yeah, we do that. And I would say the thing that people tend to like even more is we do an annual retreat. So like this past, I guess it was about a month and a half ago, we ran out the whole Fairmont Sonoma and had 250 or so members together. And we did a long weekend of, we brought in some, expertise guest speakers. We did things like, live social events, whether that's go-karting or golfing or whatever it is that people wanted to do. And so I think that those people I probably find even more value in. We do let's, do these various meetups. But I think if we look longer term, probably more of those bigger kinds of events, maybe more getting into trips people who are interested in doing a wine tasting tour of Italy or something like that. We haven't done that sort of thing yet, but another one we're probably having enough scale. So you actually have, a dozen people who are free on the same weekend and want to, go do the same activity there. That relationship building is really valuable.
It is interesting that each community has its own little identity, right? And there is a much different culture to our groups in Miami, from New York, from Chicago to San Francisco and Seattle and things like that. And so each one kind of develops its own cadence and repertoire. Like, our Denver community is super tight knit. They meet all the time. They know each other really well. Same thing with our West Coast communities. New York's culture is a little bit less like, let's get together, twice a month and, bring our spouses and do a bunch of things together. And, maybe Miami's is a little bit more event focused, like let's get together for Art Basel or F1 or something like that. So it's really interesting, the cultures of the underlying communities. But one of the nice things is that they're ambassador driven. And so we have members who actually lead the network for their particular geography, whatever major metro they're in, and they help kind of drive that, whether it's, hey, let's get together for these specific experiences, or let's just do something low key and have brunch once a month kind of thing. But I think we hosted some 200 plus events this past year, Todd. I don't want to bungle that number, but it's a lot.
Well, cool, guys. I think this is a good spot to wrap it up. Matt and Ted, thank you guys so much for joining us. Where could people go to connect with you guys and learn more about Long Angle?
Yeah, I mean, I think if they're interested in getting involved, if you just go to our website, longangle.com. If somebody is maybe interested, but they don't want to join, or maybe they're not yet in the, very high net worth demographic, you can also follow us on LinkedIn. I post there pretty actively. I think Matt does as well. So, and we actually have, if you go to our website, we also have started putting out a newsletter that we've got one that we send to members every week with, new events, new highlights, etc. But we've also started doing an external newsletter where some of the information is confidential and can't be shared beyond the group, but where we put together a lot of the insights of stuff that we can share more broadly. So if anybody wants to sign up for that, they can follow along.
Great. Excellent. Well, this has been great, guys. We appreciate the conversation. We'll make sure to include all your information and contact info in the show notes as well.